Welcome back. Today I'm going to share with you how to get 10% or more on your investments. That's right. The number one question I get asked is, Christina, where should I invest my money? As though I have the secret bullet. And what I find why that question is so interesting, it's akin to you saying to me, Christina, I want to become an entrepreneur. What type of business should I start? As though that there's one business that's a magic bullet of where you're going to make your $1 million in your business. There's many places to invest. There's thousands of places to invest. So it's not that there's the one place that's the right place to invest. I've made my net worth mostly in real estate investing. Another friend of mine, Jeremy Newsom, he built his net worth through buying and selling stocks. I have another friend of mine, Eric, and Eric made his money through investing in businesses and getting businesses up and running and taking a piece of their profit once they exit or their ownership. So there's all different places to invest, but this is what's consistent. Myself, Jeremy, and Eric, we all sit into this classification called an accredited investor. Accredited investor. So that's why it's important to become what's called a millionaire. Becoming a millionaire, yes, it's a status symbol. We all want to become a millionaire. We say, I want to become a millionaire because, hey, to be able to admit that you're a millionaire feels pretty good. Less than 10% of all Westerners are millionaires. So that's quite an achievement. And yes, having a net worth of $1 million means that we have some passive income coming in. We have some opportunity. We've got that financial security that comes in the form of net worth that very few people have. That $1 million sitting around, for example. But there's untold reasons of why you want to become a millionaire. And you want to become a millionaire and have that as the destination, the goal, the drive, the determination, the commitment, the declaration, I'm going to become a millionaire. And you start with there because when you become a millionaire, it opens up all different types of opportunities well beyond just having the $1 million in the bank, for example. But becoming a millionaire it's a stepping stone to financial freedom. Becoming a millionaire is the springboard or the launch pad. And yeah, that is that essential next step that launch pad turns into the multiple millions of dollars. And multiple millions of dollars is where that full financial freedom lives. So what does $1 million have to do with this word called an accredited investor? What is an accredited investor? An accredited investor means it's a distinction by the SEC that says that if you meet one of these two different definitions, then you are accredited. And the SEC basically says, if you fit into one of these two categories that I'm going to mention to you, that we deem you sophisticated enough and be able to have enough money sitting around to be able to tolerate any type of risk or loss. So it's a definition. So, and what the SEC says, like, hey, the stock market is regulated and pretty safe because of those regulations, for example, that you don't have to be an accredited investor, for example, to invest in the stock market. But if you want to invest in other things outside of traditional investing, then you have to be accredited. All right, so first of all, what is an accredited investor? You are an accredited investor if one, you are a millionaire. And what that means is you have a net worth of $1 million, not including the equity in your primary residence. So this is a net worth on your balance sheet of $1 million or more. So if you are a millionaire, you qualify. The second thing is you have to make $200,000 a year of household taxable income or $300,000 as a couple. So if you're bringing on your tax return, if you're showing these type of earnings, and I think you need it over the last 2 years, and you need to show that you're on track again for the current year, then this would qualify you to be considered an accredited investor. So you want to get those earnings up and you want to become this net worth millionaire. For the sake of outside of, hey, I make a lot of money and then I get to spend it, and hey, I can call myself a millionaire at the dinner table. Really, We want it from this untold talked about reason up here. So what does that have to do with 10%? What that has to do with 10% is I think we know that when we invest more traditionally, let's say in the stock market, and the stock market, if we just look at historical data, the historical data says that on the long average, the stock market is going to average an 8% return. So that means you just put your money in over the long period of time. It's going to go up in these ups and downs, but it's going to average out at 8%. Now, when people, might be you, invest and you just give it to a financial planner and just say, hey, I don't want to manage my own money. I don't want to understand my numbers. I just think if I'm putting money away, some money away, I can retire. What we don't know when we're putting that money away with financial planners, there's usually a 1 to 2% fees. And there's both fees that are disclosed, but you haven't really calculated how much that 1% is costing you over 10, 20, 30, 40 years. But then there's also undisclosed fees many times that are usually go close to 2%. So what that means is when it's all said and done, you're going to average, let's say 6% return on all of that money that you have invested in the market. Now that's where you're going to go to something called the Rule of 72. And if you don't know what the Rule of 72 is, what that means is you're not in the wealth game, because anybody in the wealth game loves the Rule of 72 and plays with the Rule of 72. And it's just a very important investor rule, basically, to be able to use and understand, or understanding it. So what the Rule of 72 says is you take 72 divided by an interest rate equals the number of years your money will double. How cool is that? So for my business owners out there, or even W-2, how often can you just keep doubling your income, doubling the profit of your business, or doubling your income every few years? It's practically impossible. Like there becomes a point in your business or in your job where you can't just keep doubling the money. And that's why we want to start creating wealth, because your money working for you can double itself over and over and over again. And this is the secret to getting rich. The secret to getting rich is this unbeknownst to most people, this Rule of 72. So let's take an example. Let's just say that you're averaging out 6%. You're just putting that money away. You're giving it to a planner. Congrats for doing that, because most people aren't even doing that. But let's say you're averaging that 6%. So if we do 72 divided by this 6%, what that's going to say, it's going to take us 12 years to double your money. That means if you put $100,000 in and you're getting 6%, it's going to be $200,000 in 12 years. And then that 200 is going to be $400,000 in another 12 years. And that $400,000 is going to be $800,000 in another 12 years. So you can just look out using this rule as kind of this general way to look at things, to say, hey, by what period of time would I be a millionaire by putting in certain amounts of money? And again, you just take 72, the money, 72 by the interest rate, and see how often it's going to double. All right, now let's go back to this accredited investor. To be an accredited investor, what happens is that you invest in off-market deals, for example. Let's just say right now, what gave me the idea to actually have this conversation is one of my friends, his name is Albert. And I've known Albert for close to 30 years now. And what Albert does is that he's a developer and an investor, and he lives in the New York City area, and he buys buildings in the different NYC boroughs, for example. And usually these buildings have come across his desk, for example, as a great opportunity. And then he wants to buy a building, renovate it, and then sell it some number of years later. But these buildings are many millions of dollars. So Albert doesn't say, hey, I'm going to buy this $10 million building on my own and put another amount of money in and then sell it. What he does is he goes out to all of his investors and says, hey, Christina, I have this deal. And this deal is, and so Albert called me last week and he says, Christina, I have this deal and I want to share it with you. And he talks to me about all the terms of the deal. He's telling me that, hey, we're raising this amount of capital. we're looking at 2x the money in this amount of time, and this is how we're going to pay dividends, and this is how the whole deal works. And so he gives me all the term sheet basically, and shows me and goes through all the numbers. And I ask the different questions that I have to ask. And then he asks me if I want to invest or not. So that's the type of deal. Now, if I weren't an accredited investor, he can't make me that offer. And we're talking about, let's just say conservatively, this deal, if it goes according to plan, it's going to be about a 15 to 16% return on investment. So let's just say in this case that we go from, in this example, let's just say he says, hey, Christina, averaging out, we're going to look at a 12% return after net, after everybody gets paid out, blah, blah, blah. So he says, I'm going to give you a 12% return. Of course, there's no guarantees. That's because accredited. We have to be able to handle the risk, for example. But that's the numbers. He's only investing in he's only buying this building, investing in it because the numbers meet a certain threshold. So in this case, if I invest that same $100,000, if you put your $100,000 in the market, got 6%, but I put that same $100,000 today and I'm getting 12%, assuming I'm going to double my money in 6 years. So the higher the return for the same amount of money, the quicker you can make your wealth. So that's why, since it's not talked about out there, and we're not really understanding what wealth creation is, we're not becoming accredited investors. We're not like, I want to become an accredited investor so I can get access to deals like Christina gets access to deals. And you keep doing this every 6 years and 6 years and 6 years. You start when you're 30 or start when you're 40, and you just double, 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 double. And next thing you know, you have $10 million or whatever your number is. But where does this all start? This all starts is that you have to make this declaration that I want to build wealth. I want to become financially free. I want to learn the basics of investing. Because here's the secret. All you need to do is make sure you're able to save the money to be able to have the money to put into deals like this. You have to want to become an accredited investor. And then you have to know people that are really good at turning your investment dollars into really nice return on investment. I'm not going to buy a building. I'm not learning all the things. I just know Albert, and I've invested with Albert many times, and I have trust with Albert, and that's all I need to know. So what did I do right? I, from a younger age, wanted to become an accredited investor and did that. And then I went and built relationships with those that had a history of being successful with these types of syndications in this case. But more than that, what I've done well and what I'm encouraging you to is I'm always working to save that $100,000, because here's the second piece. If you're going to get these 10% or greater returns, we already know you have to be accredited in most of these cases. But these types of investors are the minimum buy-in is $100,000. And that's what makes it unavailable to most, because we're not stocking away that money and saving it to have it ready to invest when the opportunity comes. And that's what you have to do. That's what I want you to do in this wealth creation journey. And that's part of my CURBS program is I'm teaching my students that, hey, we need to start siphoning money over that investor account. And yeah, we might get started in this more traditional route to at least start to have smaller amounts of money that are starting to grow and build and get that money working, because 6% is great because it's better than less than that for, of course. But ultimately, we want to start managing our money and our finances by doing everything I'm teaching in every single video on this YouTube channel. If you watch every video, you'll get all the lessons, kind of the mindset of the lessons and just knowledge like this, so that you can start moving towards this type of money mindset and money sense, if you will, to be able to start moving into this category. Because this is not only how you get rich, but it's how you get rich fast. And I'm going to say get rich faster. There's no shiny penny. All the stuff out there is teaching you how to go make more money and start more businesses and spend more on marketing, or quit your day job or get a side hustle, and that's all about earning. And that is the biggest kind of lie and mistruth and way people are just, some of these companies are just taking people's money, because our mindset is that the way to get rich is to make more money. And you've heard me time and time again, like, no, on this board is how you get rich. This is the secret. And it all goes back to that number one wealth rule that says you have to spend less than you make, and you have to manage your money to fill these buckets, to have that $100,000 to be able to grow so you can start to put your money in these types of investments. And you have to have this desire to become accredited. And you can do that one of two ways. You're a net worth millionaire, and that qualifies you, or obviously you're showing this type of money on your tax return. All right, that's what I've got for today. If you want access to this investment, time is of the essence. All you need to do is put in the comments box is that I'm interested. Just say interested. That's all you need to do is put in the comment box. Now, do not do that if you're not an accredited investor. This type of opportunity is only available. My investors will only talk to anybody that's accredited, because it's the law, but two, of course, that lowers their risk even if it weren't a law. So if you're an accredited investor, put in the comments invested, and I might have a short chat with you to see maybe if you qualify, and I can make this type of introduction, because my friend Albert is in fundraising right now. And if you're not an accredited investor but would like to become one, then just put down in the comments, I want to be a millionaire, and I'll set you up with a call with one of my coaches, and we can talk about what you need to do next to get on track to become a millionaire. One, so that you can have that status symbol, but more importantly, so that we can use that millions to create more millions. All right, thumbs up if this was helpful. Put in comment of one of the two options, and I'll see you on the next video.